Right now, something unusual is happening in the market. Billions of dollars are being poured into artificial intelligence, new data centers, enterprise software, automation systems, and most of that money is flowing into the same handful of big names everyone already knows. But here's the catch. While attention is locked onto those giants, there's a completely different layer of the AI ecosystem. Smaller, underfollowed companies that haven't moved the way you'd expect. In this video, we're looking at two AI-related stocks. One trading around 193, the other near 130. Both sit inside expanding technology-driven markets, but neither has seen the kind of price movement you'd normally associate with this level of industry growth. So the real question becomes, why hasn't the market fully reacted yet? And what might change that? Now this is where things get interesting, because right now, the AI narrative is heavily concentrated in one direction: chips, cloud providers, large-scale infrastructure. That's where most of the capital is flowing, but underneath that, there's a quieter layer forming. This is where pricing inefficiencies usually exist, and this is the type of layer institutions quietly watch, not because it's obvious, but because it's overlooked. We're talking about companies tied to data interpretation, behavioral intelligence, and even human system interaction, areas that don't always get immediate attention, but tend to become more important as AI adoption expands. Now, this doesn't guarantee anything, but it does explain why this part of the market matters, because historically, gaps like this don't stay open forever. And this is exactly where smaller cap opportunities tend to form. So let's start with the first stock. This company operates in a part of the AI pipeline that most people don't even think about. Not chips, not cloud, but something just as important: understanding human behavior. And this is the part most investors miss, because AI isn't just about processing data, it's about interpreting intent. This company has built a system designed to analyze how people interact online, what they search, what they engage with, and what signals they leave behind. That data is then used to deliver more accurate, more targeted outcomes, especially in digital environments where attention is everything. But here's the catch. Most people still think of this space as just advertising, when in reality, it's evolving into something much bigger: AI-driven behavioral intelligence. And if this layer expands, companies like this become critical, because as AI systems scale, understanding user intent becomes just as valuable as processing raw data. Now, when you zoom out and look at the broader industry, you'll notice something interesting. The companies dominating headlines are focused on building AI, but companies like this are focused on how AI interacts with people. That's a completely different layer, and if that layer grows, it creates a different type of opportunity. Now let's talk about movement. This stock previously traded above the $3 range before pulling back significantly to around 190, where it sits now. So you've got a clear shift from higher expectations to a reset phase. And now the question becomes, is this stabilization or just a pause before another move? Because historically, stocks in emerging tech cycles tend to move in waves, not straight lines. And when sentiment resets, that's often where attention starts rebuilding. From a business perspective, this company generates revenue through its AI-powered platform, working with brands and agencies to optimize digital outcomes based on data signals. It's not flashy, but it's functional. And when you actually look at the company behind this, it's Inuvo Inc., trading under the ticker INUV, currently around $1.93. Now this is where things shift, because even though it sits inside a growing AI-driven space, the market hasn't fully priced in that positioning. This doesn't mean it moves tomorrow. There are risks here. Timing is the key factor, but it does explain why it's being watched. Now, before we get into the second stock, here's something most people completely overlook. Even though AI demand is accelerating across industries, Nah, not every company connected to that trend moves at the same speed. Some react immediately, others lag behind, sometimes for months, and those delays are often where the biggest disconnects happen. So now, let's look at the second stock. But unlike the first company, which focuses on understanding human behavior in digital systems, this one operates much closer to the human body itself, where the first works on data, this one works on biology. And this is where it gets interesting, because instead of optimizing clicks or engagement, this company builds technology designed to directly interact with the human brain. Specifically, it focuses on non-invasive treatment systems used in mental health care, devices that use targeted stimulation to influence neural activity. Now, this might not sound like traditional AI, but it sits right next to it. Because as healthcare becomes more data-driven, more automated, and more personalized, systems like this become increasingly relevant. And if that trend continues, companies operating at the intersection of technology and human biology naturally gain more attention. Now, from an industry standpoint, mental health treatment is already a massive and growing space, but innovation in this area has been relatively slow. So when technology starts entering that space in new ways, it creates a different type of opportunity. Now, let's talk about movement again. This stock has also seen a significant decline over time, trading at much higher levels in the past before dropping to around $1.30 today. So just like the first stock, you're looking at a reset, a shift from past expectations to current uncertainty. And now the question becomes, is this where interest starts returning? Because in many cases, heavily beaten down stocks either stay quiet or become the base for future moves if conditions change. This is where it gets interesting, because when you actually look at the company behind this, it's Neuronetics Inc., trading under the ticker STIM, currently around $1.30. And again, the same idea applies. This doesn't guarantee anything. There are real risks here, but the positioning is what makes it worth watching. So now you've got two very different setups, one focused on AI-driven data and behavioral intelligence, the other focused on technology interacting with human biology. One operates behind the scenes in digital systems, the other operates directly in real-world healthcare environments, and this creates a very interesting comparison, because the first stock may benefit faster if digital AI systems continue scaling rapidly, while the second might take longer, but sits inside a completely different type of market expansion. So the real question becomes, which one gets recognized first, the data layer or the human system layer? And more importantly, which one is the market currently underestimating more? Because that's usually where the opportunity is. Now, when you zoom out, the bigger idea here isn't just these two stocks. It's the layer of the AI economy they represent. Because while most attention stays focused on the obvious leaders, the supporting systems, data interpretation, behavioral intelligence, human-tech interaction continue to expand underneath. And this is the layer that tends to move later, but often more aggressively. Not because it's guaranteed, but because it starts from a place of lower expectations. If this helped you see the AI space a little differently, that's the goal. And if you want more breakdowns like this, you already know what to do.